Question 1. Claims process and settlement. A policyholder in Alaska submits a claim for property damage. After an investigation, the insurer determines that part of the damage was pre-existing and not caused by the reported incident. What is the insurer's primary responsibility in this situation? A. Deny the entire claim, as any pre-existing damage voids coverage. B. Pay only for the portion of damage caused by the covered incident and deny the rest. C. Pay the full claim amount and recover costs from the policyholder later if needed. D. Refer the claim to the Alaska Insurance Fraud Unit for investigation. Answer. B. Pay only for the portion of damage caused by the covered incident and deny the rest. Explanation. The insurer must pay only for the covered loss that is directly caused by the insured incident and not for any pre-existing damage. According to Alaska's Unfair Claims Practices Act, insurers are required to investigate claims thoroughly and settle based on the facts of the loss. They cannot deny the entire claim if only a portion of the damage is excluded. Denying a valid portion of a claim would be considered an unfair claims practice under Alaska law. Question 2. Alaska-specific property insurance regulations, scenario-based. Sarah owns a home in a rural part of Alaska where earthquakes are common. She recently purchased a homeowner's insurance policy. A month after purchasing the policy, an earthquake causes significant damage to her property. Sarah files a claim, but the insurer denies it, stating that earthquakes are not covered under a standard homeowner's policy. Sarah is unsure whether this denial is valid. Which of the following actions should Sarah take to ensure her property is protected against future earthquake damage? A. Purchase an earthquake endorsement to her existing policy. B. File a complaint with the Alaska Department of Insurance as earthquake coverage is mandatory. C. Seek coverage under the Alaska Guarantee Association. D. Rely on her standard homeowner's policy as insurers are obligated to cover all natural disasters. Answer A. Purchase an earthquake endorsement to her existing policy. Explanation. Standard homeowners insurance policies typically do not cover earthquake damage. In Alaska, homeowners must purchase an earthquake endorsement or a separate earthquake insurance policy to be covered for this peril. The insurer's denial of the claim is valid if Sarah did not have this coverage. Filing a complaint with the Alaska Department of Insurance would not be appropriate unless there is evidence of unfair claims handling. The Alaska Guarantee Association only steps in when an insurer becomes insolvent and does not cover uninsured perils. Question 3. Insurance fraud detection and prevention. An insurance company notices that a policyholder in Alaska has submitted multiple claims for damage to their vehicle, all with similar descriptions and timing. The claims are just as suspects the policyholder may be committing soft fraud by exaggerating the extent of the damage. Which of the following actions is appropriate for the insurer to take next? A. Deny all future claims from the policyholder without investigation. B. Conduct a thorough investigation and report any suspected fraud to the Alaska Insurance Fraud Unit. C. Pay the claims to avoid potential legal disputes. D. Cancel the policy immediately without providing a reason. Answer. B. Conduct a thorough investigation and report any suspected fraud to the Alaska Insurance Fraud Unit. Explanation. Soft fraud occurs when a policyholder exaggerates legitimate claims. Insurers must thoroughly investigate any suspicious claims and report suspected fraud to the Alaska Insurance Fraud Unit. The Alaska Fraud Prevention Act requires insurers to have anti-fraud programs and to cooperate with state investigations. Simply denying claims or cancelling a policy without following proper procedures could result in regulatory penalties for the insurer. Paying fraudulent claims would result in financial loss and encourage further fraudulent behavior. Question 4. Insurance providers and market participants. An insurance agent in Alaska is unsure about whether they are allowed to sell policies for multiple insurance companies. Which of the following statements accurately describes the agent's licensing requirements? A. The agent must obtain separate licenses for each insurer they represent. B. The agent must only be licensed for one insurer but can sell policies from multiple companies under that license. C. The agent is allowed to sell policies for multiple insurers under a single license as long as they don't work for more than 2 companies. D. The agent does not need license if they are selling insurance in Alaska as part-time business. Answer A. The agent must obtain separate licenses for each insurer they represent. Explanation. In Alaska, insurance agents are required to be licensed for each insurer they represent. Each insurer that an agent sells policies for requires its own specific license. The agent cannot operate under a single license for multiple insurers. This requirement ensures that agents are well versed in the regulations and policies of each insurer they represent, which is essential for consumer protection and regulatory compliance. Question 5. Premiums and rates. Which of the following factors does not directly affect the premium rates for property insurance in Alaska? A. The property's proximity to fault line or flood zone. B. The homeowner's credit score and payment history. C. The homeowner's age and personal income. D. The property's age, construction type, and condition. Answer C. The homeowner's age and personal income. Explanation. Premium rates for property insurance are primarily based on the risk factors associated with the property itself and the environment around it, such as the proximity to fault lines or flood zones, the property's age and condition, and the homeowner's credit score. However, the homeowner's age and personal income are not typically considered direct factors in determining premiums, though they could influence the underwriting process. Insurers base their rates on measurable risks related to the property and its surroundings. Question 6. Ethical practices and fiduciary responsibilities. An insurance agent receives a commission for selling a particular policy but later realizes that the policy may not fully meet the needs of the client. Which of the following actions would be in violation of the agent's fiduciary duty to the client? A. Selling the policy to the client and not disclosing the possible gaps in coverage. B. Suggesting policy that fits the client's budget even if it doesn't offer complete coverage. C. Offering the policy with the highest commission but explaining the coverage gaps clearly to the client. D. Advising the client to consult with another agent if the policy doesn't fully meet their needs. Answer A. Selling the policy to the client and not disclosing the possible gaps in coverage. Explanation. Insurance agents have a fiduciary responsibility to act in the best interest of their clients, which includes fully disclosing all relevant aspects of a policy, including any gaps in coverage. Selling a policy without disclosing significant gaps violates the agent's ethical duty and could expose them to regulatory penalties under Alaska's insurance laws. Offering advice to consult another agent, even if it leads to a loss of commission, is a more responsible and ethical choice when the agent recognizes that the policy may not meet the client's needs. Question 7. Regulatory environment. Under Alaska's insurance regulations, which of the following is not valid reason for the Department of Insurance to take disciplinary action against an agent? A. Failing to meet continuing education requirements. B. Fraudulent activity or misrepresentation in the sale of policies. C. Selling policies without the proper state license. D. Receiving complaint from client regardless of the outcome. Answer D. Receiving a complaint from a client regardless of the outcome. Explanation. While receiving a complaint from a client is an important part of monitoring an agent's performance, it is not by itself valid reason for disciplinary action. The Alaska Department of Insurance takes disciplinary actions based on violations such as fraudulent activity, misrepresentation, or failure to meet licensing and continuing education requirements. However, the outcome of complaint is what determines if any disciplinary action is warranted. Complaint alone, unless substantiated, does not justify sanctions. Question 8. Insurance law and legal concepts. Which of the following best describes subrogation in the context of insurance? A. The insurer's right to pursue third party for damages paid to the insured. B. The insurer's ability to deny claim based on fraud or misrepresentation. C. The insured's ability to sell their claim rights to another party for financial compensation. D. The process of negotiating settlement terms between the insurer and the insured. Answer A. The insurer's right to pursue third party for damages paid to the insured. Explanation. Subrogation is the process where an insurer seeks reimbursement from third party responsible for the loss after they have already paid the insured. This is common practice to ensure that the insurer does not bear the financial burden when another party is at fault for the loss. Subrogation helps keep premiums low by recovering the costs of claims from third party wrongdoers. The other options describe different concepts, but subrogation specifically refers to the insurer's pursuit of third party recovery. Question 9. Life and health insurance regulations. Which of the following statements about group health insurance in Alaska is true? A. Employers are required to offer group health insurance to all employees, regardless of full-time or part-time status. B. Group health insurance plans must offer the same coverage for all employees without any exclusions for pre-existing conditions. C. Alaska law allows employers to exclude employees who have had more than 30 days of absence due to medical reasons from the group health plan. D. Group health plans are exempt from Alaska's mental health parity laws if they cover telehealth services. Answer B. Group health insurance plans must offer the same coverage for all employees without any exclusions for pre-existing conditions. Explanation: under Alaska's health insurance regulations and federal laws such as HIPAA, group health insurance plans must offer the same benefits to all employees within the group without discriminating based on pre-existing conditions. Employers are not required to offer coverage to part-time employees, and exclusions for pre-existing conditions are prohibited in group plans. Alaska's mental health parity law applies to all group plans, even those that cover telehealth services, and they must provide equal coverage for mental health benefits as they do for physical health benefits. Question 10. Insurance contracts and policy provisions. Which of the following is true about policy cancellation under Alaska insurance law? A. The insurer must provide at least 30 days notice before cancelling a policy. B. Insurers can cancel a policy at any time without notice if the policyholder misses a payment. C. If a policyholder cancels their policy, the insurer is required to refund the entire premium amount. D. The insurer can cancel a policy immediately without notice if they suspect fraud. Answer A. The insurer must provide at least 30 days notice before cancelling a policy. Explanation: under Alaska law, insurers must provide a minimum of 30 days notice to the policyholder before cancelling a policy for reasons other than non-payment. Non-payment of premiums is an exception where a shorter notice period may apply, but insurers must still follow proper notification procedures. If the policyholder cancels the policy, they are generally entitled to a pro-rata refund of the premium, not the full amount. Cancellation for fraud can occur, but even in such cases, insurers are typically required to provide some notice before termination. Question 11. Insurance licensing. Which of the following is a requirement for obtaining an insurance agent license in Alaska? A. The agent must complete pre-licensing education and pass the state exam. B. The agent must be a resident of Alaska for at least 5 years. C. The agent must submit proof of insurance policy sales for the previous 5 years. D. The agent must be at least 30 years old to apply for a license. Answer A. The agent must complete pre-licensing education and pass the state exam. Explanation: to obtain an insurance agent license in Alaska, an applicant must complete the required pre-licensing education, pass the state licensing exam, and meet other state-specific requirements. There is no requirement for the agent to have prior sales experience or to be a resident for an extended period, although residency may be a requirement for non-residents applying for licenses in Alaska. Question 12. Insurance fraud. Which of the following is an example of insurance fraud in Alaska? A. Falsifying a claim to collect money from an insurance company. B. Submitting a claim for legitimate damage to a vehicle. C. Reporting an injury while working in a high-risk job. D. Providing an inaccurate estimate for repairs after an accident. Answer A. Falsifying a claim to collect money from an insurance company. Explanation: insurance fraud involves dishonest actions designed to obtain insurance benefits through misrepresentation or deceit. Falsifying a claim, such as exaggerating damage or submitting a claim for a non-existent loss, is a clear example of fraud. Legitimate claims, even if estimates vary, do not constitute fraud as long as they are truthful and reasonable. Question 13. Risk management and underwriting. In Alaska, what is the primary factor that insurers consider when underwriting a property insurance policy? A. The location of the property, especially the risk of natural disasters. B. The homeowner's occupation and income. C. The property owner's family size and number of dependents. D. The property's age and design, regardless of location. Answer A. The location of the property, especially the risk of natural disasters. Explanation: insurers primarily evaluate the risk factors associated with the property's location, particularly natural disasters like earthquakes, floods, or wildfires, which can be common in Alaska. While property age and design are also important, the location of the property plays a significant role in determining the premium and underwriting decisions. The homeowner's personal details are typically secondary considerations unless they affect risk. Question 14. Health insurance coverage. Which of the following health insurance policies is exempt from Alaska's mental health parity laws? A. Short-term health plans. B. Employer-sponsored group health insurance. C. Medicaid and Medicare plans. D. Health maintenance organizations, HMOS. Answer A. Short-term health plans. Explanation: Alaska's mental health parity laws require insurers to provide coverage for mental health services that is equal to the coverage provided for physical health services. However, short-term health plans are exempt from these parity requirements. These plans are often designed to cover only limited durations or specific types of care, which may not include comprehensive mental health benefits. Question 15. Claims process and timeliness in Alaska. How long does an insurer have to acknowledge receipt of a claim under state law? A. Within 10 business days. B. Within 30 days of the claim being filed. C. Within 45 days of the claim being filed. D. Within 60 days after the policyholder submits the claim. Answer A. Within 10 business days. Explanation. Alaska law requires insurance companies to acknowledge receipt of a claim within 10 business days. This timeline ensures that policyholders are kept informed of the status of their claims and that insurers act promptly in handling claims. Question 16. Workers' compensation. Which of the following is true about workers' compensation insurance in Alaska? A. Workers' compensation is mandatory for employers with one or more employees. B. Workers' compensation insurance is optional for businesses with fewer than 10 employees. C. Employees are required to purchase their own workers' compensation coverage. D. Employers can opt out of workers' compensation coverage if they have clean safety record. Answer A. Workers' compensation is mandatory for employers with one or more employees. Explanation. In Alaska, workers' compensation insurance is mandatory for all employers who have one or more employees. This law provides coverage for employees injured while on the job, ensuring that they receive medical benefits and compensation for lost wages. Employers are not permitted to opt out of providing this coverage, even if they have good safety record. Question 17. Property insurance exclusions. Which of the following is typically excluded from coverage in a standard property insurance policy in Alaska? A. Damage from earthquakes. B. Fire damage to a building. C. Theft of personal property. D. Water damage due to plumbing issues. Answer A. Damage from earthquakes. Explanation. Earthquake damage is typically excluded from standard property insurance policies in Alaska. However, coverage for earthquakes can often be added through a rider or separate earthquake insurance policy. Other types of damage, like fire and theft, are generally covered unless specific exclusions are outlined in the policy. Question 18. Insurance agents' fiduciary duties. Under Alaska law, what is primary fiduciary responsibility of an insurance agent? A. Acting in the best interest of the client and disclosing all relevant information. B. Encouraging clients to buy the most expensive policies for higher commissions. C. Avoiding any communication with the insurer about the client's claim status. D. Recommending policies based solely on the insurer's incentives and bonuses. Answer A. Acting in the best interest of the client and disclosing all relevant information. Explanation. An insurance agent's fiduciary duty requires them to act in the best interests of the client, ensuring that they provide accurate, relevant, and clear information. Agents must disclose all material information about the policies they sell and avoid any conflict of interest, such as recommending policies that benefit the agent more than the client. Agents are expected to provide unbiased advice that aligns with the client's needs. Question 19. Auto insurance minimum requirements. What is the minimum auto insurance liability coverage required by law in Alaska? A. $50,000 per person for bodily injury. B. $25,000 per person for bodily injury, $50,000 per accident for bodily injury, and $25,000 for property damage. C. $100,000 per accident for bodily injury. D. $10,000 for property damage and $100,000 for bodily injury. Correct answer. B. $25,000 per person for bodily injury, $50,000 per accident for bodily injury, and $25,000 for property damage. Explanation. Alaska law requires drivers to maintain minimum liability coverage of $25,000 per person for bodily injury, $50,000 per accident for bodily injury, and $25,000 for property damage. This coverage is intended to ensure that drivers are financially responsible for the damages they cause to others in the event of an accident. Question 20. Business insurance types. Which type of insurance is most appropriate for protecting a business against claims of negligence or mistakes made in the professional services they provide? A. Professional liability insurance, errors and omissions. B. Commercial property insurance. C. Workers' compensation insurance. D. General liability insurance. Answer A. Professional liability insurance, errors and omissions. Explanation. Professional liability insurance, also known as errors and omissions insurance, is designed to protect businesses that provide professional services from claims of negligence, mistakes, or failure to perform professional duties. This coverage is critical for businesses like consulting firms, medical professionals, or legal services providers. General liability insurance covers bodily injury and property damage, but it does not address professional negligence. Question 21. Insurance advertising. Which of the following practices is prohibited in insurance advertising in Alaska? A. Misleading statements about the benefits or coverage of the insurance product. B. Providing a free estimate for property damage. C. Offering a discount for policyholders who renew early. D. Advertisements that highlight the insurer's reputation and history. Answer A. Misleading statements about the benefits or coverage of the insurance product. Explanation. Insurance advertising in Alaska, as in many states, must be truthful and not misleading. Any advertisement that misrepresents the benefits, terms, or coverage of an insurance policy is prohibited. Transparency is crucial to ensure that consumers can make informed decisions about their insurance products. Question 22. Flood insurance. Which of the following is true regarding flood insurance in Alaska? A. Flood insurance is typically not included in standard homeowners insurance policies. B. Flood insurance is mandatory for all homeowners in Alaska. C. Flood insurance only applies to properties located in floodplains. D. Homeowners insurance automatically includes flood coverage for properties located near bodies of water. Answer A. Flood insurance is typically not included in standard homeowners insurance policies. Explanation. Flood insurance is generally not included in standard homeowners insurance policies. In Alaska, homeowners must purchase separate flood insurance if they want coverage for flood damage. The National Flood Insurance Program, NFIP, provides a government-backed option for those seeking flood coverage. Question 23. Workers' compensation claim time limit. What is the maximum time allowed for filing a workers' compensation claim in Alaska after the date of injury? A. 2 years. B. 1 year. C. 5 years. D. 3 years. Answer A. 2 years. Explanation. In Alaska, workers' compensation claims must be filed within 2 years from the date of injury. After this period, the claim may be barred and the employee may lose the right to compensation. It's essential for workers to report injuries promptly to ensure they are within the filing time limit. Question 24. Surplus lines insurance. Under Alaska law, which of the following is a requirement for placing insurance with a surplus lines insurer? A. The insurer must be licensed to operate in Alaska. B. The policyholder must first be offered coverage by an admitted insurer. C. The surplus lines insurer must have a rating of at least B from A. Best. D. Surplus lines insurance cannot be placed for commercial risks. Answer B. The policyholder must first be offered coverage by an admitted insurer. Explanation. Alaska law requires that before placing a policy with a surplus lines insurer, the policyholder must first be offered coverage from an admitted insurer. An insurer authorized to operate in Alaska. Surplus lines insurance is typically used when no admitted insurer can provide the necessary coverage. Question 25. Insurance Commissioner Authority. What is one of the primary responsibilities of the Insurance Commissioner in Alaska? A. Regulating and enforcing insurance laws to protect consumers. B. Approving individual insurance policy rates and premiums. C. Issuing insurance licenses for agents only. D. Ensuring that all insurance companies provide free coverage for the first 30 days. Answer A. Regulating and enforcing insurance laws to protect consumers. Explanation. The primary role of the Insurance Commissioner in Alaska is to regulate the insurance industry and enforce state insurance laws. This includes overseeing the activities of insurance companies, protecting consumers from unfair practices, and ensuring that insurance products comply with state regulations. The Commissioner does not approve individual insurance rates or offer free coverage. Question 26. Homeowners insurance exclusions. Which of the following is typically excluded from a standard homeowners insurance policy in Alaska? A. Earthquake damage. B. Theft of personal property. C. Damage caused by a fire. D. Vandalism or malicious mischief. Answer A. Earthquake damage. Explanation. Earthquake damage is typically excluded from standard homeowners insurance policies in Alaska. Homeowners can purchase separate earthquake insurance or an endorsement to cover this specific risk. Fire, theft, and vandalism are generally covered unless explicitly excluded by the policy. Question 27. Insurance claims settlement process. Under Alaska law, what is the maximum time an insurer has to settle a claim after receiving all necessary documentation? A. 30 days. B. 45 days. C. 60 days. D. 90 days. Answer A. 30 days. Explanation. Alaska law mandates that an insurer must settle a claim within 30 days after receiving all necessary documentation such as medical records or proof of loss. This time frame ensures that claimants are not left waiting unnecessarily for payment or resolution. Question 28. Auto insurance uninsured motorist coverage. What is the minimum required coverage for uninsured motorist insurance in Alaska? A. $50,000 per person and $100,000 per accident. B. $25,000 per person and $50,000 per accident. C. $100,000 per person and $200,000 per accident. D. $10,000 per person and $20,000 per accident. Answer B. $25,000 per person and $50,000 per accident. Explanation. In Alaska, the minimum required coverage for uninsured motorist insurance is $25,000 per person and $50,000 per accident. This coverage is designed to protect drivers who are involved in accidents with uninsured drivers or those with insufficient insurance. Question 29. Insurance agents' continuing education. How many hours of continuing education must an insurance agent complete in Alaska every 2 years to maintain their license? A. 24 hours. B. 12 hours. C. 18 hours. D. 30 hours. Answer A. 24 hours. Explanation. In Alaska, insurance agents are required to complete 24 hours of continuing education every 2 years in order to maintain their license. These hours must include at least 3 hours of ethics training, ensuring that agents remain knowledgeable about the latest regulations and ethical standards. Question 30. Health insurance coverage for pre-existing conditions. Which of the following statements is true regarding health insurance coverage for pre-existing conditions in Alaska? A. Insurance companies cannot deny coverage for pre-existing conditions under the Affordable Care Act. B. Pre-existing condition exclusions are allowed for policies sold through the state's health insurance marketplace. C. Health insurance providers in Alaska can deny coverage for pre-existing conditions if the condition is not disclosed. D. Only individual health insurance plans are required to cover pre-existing conditions. Answer A. Insurance companies cannot deny coverage for pre-existing conditions under the Affordable Care Act. Explanation. Under the Affordable Care Act, health insurance companies cannot deny coverage or charge high premiums due to pre-existing conditions in Alaska and across the U.S. This provision applies to most health insurance policies, including those sold through the state's health insurance marketplace.